Okay, welcome to the final stretch, everybody. I hope you've had a good lunch. Plenty of networking going on. We are going to continue with what promises to be a very engaging, very interesting session. Quite simply, the Africa opportunity. I'm going to hand you over to Mercy Moroki, who is going to be running proceedings. Mercy, over to you.
Thank you. Thank you all for coming to this session. In this session, we're going to use the opportunity to explore what opportunities and challenges are faced when it comes to investment in Africa, and in particular, we're going to focus on infrastructure. I'm going to be joined by 3 esteemed panelists, as well as Dr. James Mwangi, who will be giving opening remarks. The story of Africa's development is changing. 6 of the world's fastest growing economies are in Africa. Governance is increasingly strengthening, investment opportunities stretch far and wide, and the world is very keen to do business with Africa, but there does remain some challenges, and most notably a finance gap. For instance, the African Development Bank estimates that the continent still requires up to £108 billion in investment every year to build better infrastructure. McKinsey estimates that £93 billion is needed annually over the next decade just for sub-Saharan Africa. And of course, on top of finance access, other limitations remain, like power, logistics, and political and institutional challenges. So in this session, we're going to discuss those opportunities and those challenges and look at what is needed both in the immediate term as well as in the long term. Now, Dr. James Mwangi is going to be given opening remarks, so I'll hand over to him in just a second, and afterwards I'll introduce my panel. For those who don't know, I'm sure most of you do. He is the Group CEO of Equity Group Holdings. He's led Equity to become an integrated financial services group operating in 6 African countries across Central and Eastern Africa, client base of over 17 million and asset base of over 13 billion US dollars. He's credited with democratizing financial access across Central and East Africa, and he has a number of awards under his belt as well, which includes the 2012 Ernst & Young World Entrepreneur of the Year Award, and has also been named by the Financial Times as top 20 most influential people in Africa and one of the Bloomberg 50 in 2019. So without further ado, I'll hand over to Dr. James Mwangi.
Thank you very much, moderator, colleagues. It's a really great honor this afternoon to be a discussant on the African opportunity. I've just been given 7 minutes, so allow me to go straight to the conversation. When you talk about the African opportunity, this is an opportunity scattered among 54 countries. So it's always good to bear in mind that when we talk about challenges, they are not challenges of Africa, they will be challenges of individual countries. When you talk about opportunities, there will be opportunities of very specific countries. However, it is good to say, generally, Africa is at the same level of economic development. So there are many similarities within the 54 countries because of the state. Most of the African countries are 60 years old in terms of the sovereignty. So again, both in every aspect, whether it's governance structures, whether it's legal frameworks, whether it's demographics, they are almost the same. So there are a few areas I will generalize, but then you remember, it will be very, very specific. Broadly, Africa is a massive continent. It is said you can feed America, you can feed India, you can feed China, and still be left with the space for Australia and New Zealand. That is the size of Africa. So again, the biggest opportunity is underutilized natural resources, because you talk of nearly 30% of the global land mass, but only 1.2 billion people. So it's one of the most sparsely populated continents we have in Africa. However, because of its size, Africa is endowed a lot with natural resources. Maybe, generally speaking, 40% of all the critical natural resources of the world are in Africa. 60% of all arable land that is not utilized for food security, for agriculture, is in Africa. So that's a very specific example. When you look at the critical resources that will lead the world in cleaner environment, let's put it that way, they are broadly in 3 countries in Africa. So that concentration, so let's see the biggest opportunity is productivity gains in agriculture and natural resources. Africa lags behind the rest of the world in productivity gains. With modern science and technology, Africa can leapfrog and become very, very productive, and most likely beat the rest of the world because it has no legacy systems. So it's investment straight away to modern science and technology, and then productivity in Africa can go 6 times. In agriculture and productivity in natural resources. If that is the case, then the next biggest opportunity other than productivity gain. And when I say productivity gains, it means revenue. Because land, you don't need to increase the amount of land, it is increase in productivity of land. It's not increase in amount of extraction of natural resources, it's the utilization of natural resources. Now, if productivity goes up 6 times, the second opportunity then is value addition. Huge opportunity for value addition, particularly in the agricultural sector. That is supported by 2 major factors: a rapidly growing population in Africa that is anticipated to be at 2.5 billion by 2050, doubling in just under 30 years. So you could imagine how steep that consumption will be. The second one is urbanization. As population become urbanized, it shifts away from feeding on low food. It has to be processed. That food needs to be transported from rural areas to urban centers to feed 70% of urbanized population. The third one, of course, is that we really can talk about is demography. At 1.2 billion people, however, let me qualify, in 54 countries is a big market. So don't see it from an African continent. You can put it in perspective of trade blocks, the East African Community, the ECOWAS, the COMESA, and see it that way, because that's the level of integration is not, there is aspiration of the African continental free trade area, but there is already existing regional trade block. So if you talk about East Africa, you are talking about 300 million people. You are talking of America, you are talking about Europe in terms of population. But the most significant aspect of that population is it has a meanage of 18 years, the entire continent. What it means is that if you capture the consumer, you might have the consumer for the next 80 years. So the cost of acquisition of a client over the period you are likely to maintain the client is very, very low. So you can compare that with Japan or Italy. I don't want to be specific about the average age of the population, but you will see a gap of nearly 40 years. That in terms of the period which you could. So that is a huge opportunity in the African continent. Now, we talked about a mean age of 18. Now, talk about technology. Which other market can then beat Africa in the opportunity of technological investment? This is a digital age. They have gone to school during the fourth industrial revolution. It's not even a digital age, it's the fourth industrial revolution. So it's savvy in terms of technology, and hence consumption of technological investment, or the opportunity to invest in Africa, is very, very massive. The last one is looking at the global environment. COVID was a health pandemic, but the consequences were not necessarily of a health nature. They ended up being more of an economic nature. The biggest impact of COVID was really the issue of broken supply chains. It did break supply chains. And the question is, Africa could not get PPEs for almost 2-3 months until it developed its own capacity. And so Africa has realized when tough moments come and global supply chains are not working, it will be cut off from supply like it was done with the vaccines. Africa has chosen to develop local and regional supply chains. And if it does regional supply chains, then the best opportunity is in Africa, because it is a sovereign decision by countries that we can no longer depend on global supply chains. There is a war in Europe, but the countries that have suffered most are the ones in Africa because of the great dependence they had on Ukraine and Russian wheat and sunflower. And suddenly they have realized we have 60% of the RAD. Why don't we use the RAD and liberate ourselves from dependence? I think that will spread to edible oils. In 1960, DRC and Nigeria were number 1 and number 2 largest producers of edible oils, or the raw material. Today, 90% is in Southeast Asia. Nothing has really changed. Africa can bounce back. The concentration of manufacturing. We saw what happened between Russia and Ukraine, or let's call the European situation. What about if there was an Asian situation? What would happen to Africa with its dependence on manufactured goods, all concentrated from Asia? Africa has woken up to the reality that it has to develop an element of self-sufficiency. And Africa has realized it doesn't have resources. So let me close by saying the biggest opportunity for Africa is trade and investment. Trade with Africa, because it has a young, growing population, likely to be 25% of the entire world population by 2050. You can't go wrong with a mean age of 18, so huge opportunity. If we are in technology, the biggest market in the world will be Africa because of the mean age of the population. So trade, trade, trade. But ultimately, Africa has decided it needs to create its own local and regional supply chains, and that means investment. The investments in Africa spread across, and I think our moderator, Mercy, talked, or the introducer of the program, talked about infrastructure. Look at the case of Kenya. Kenya now, 83% of all energy is renewable green energy. But if you go to the arithmetics, about 60% of it is generated by the private sector. It's public-private partnership. So infrastructure, utilities are very big. Those who have recently been in Nairobi, there is an expressway from the airport all the way to Western. It's a private investment, literally almost everything. We are now talking about if you can do this in loads, if you can do it in power, why can't you do it in water? And so essentially a huge opportunity in infrastructure. The second biggest opportunity other than infrastructure is manufacturing. Urbanizing population require a lot of food, processed food. Land is there, productivity is going up, that food needs to be processed for the urban population. Huge, huge opportunity. And of course, productivity gains on natural resources. To me, the biggest windfall in Africa is on productivity gains. Because every other part of the world has managed, whether it's through the agrarian revolution, the green revolution, they have increased their productivity 6 times higher than where Africa is. So we need to use the same, and now we have modern technology. Why don't we use that technology and, of course, benefit from the windfall? And that in natural resources, 40% of the critical natural resources of Africa, of the world are in Africa, value addition. I think the issue that really remains is the firmness of the African government to say, process our resources in Africa and trade in Africa, and then export to the rest of the world. So to me, that's how I see it. And the last, as I see it, I would say I've watched the equity. As you know, we sustained a growth of 116% compounded growth rate for 21 years, because you're starting from a very low base. Very, very low base. So you can grow exponentially. And when you grow, those who know the story of equity, in the last 20 years, we have issued 600 bonus and split shares for every share anybody has had in 2000. 600 shares on one share in 20 years, simply because of growth. That is the African opportunity. I wish you well as you take your flight, as you take your checkbook to write your investment in Africa. Thank you.
Thank you, Dr. James Mwangi. And from a personal note, it's really nice to hear another fellow Kenyan, because there's not many Kenyans in British politics. So it's nice to hear a familiar voice and a familiar accent as well. Thank you for your thoughts. I'm just going to introduce my panel today. We have Julia Prescott over on your far left over there, co-founder and chief strategy officer at Meridiam, a global infrastructure fund with over £18 billion of assets under management and over 100 global projects. Julia is also a commissioner on the UK's National Infrastructure Commission, a member of the government's UK Investment Council, and an honorary professor at the Bartlett School at the University College London. In the middle, we have Toyin Sani, who's Executive Vice Chair of Emerging Africa Group, a pan-African investment group which invests in sectors such as roads and power infrastructure, investment banking and fintech, with a focus on SMEs. In 2016, Toyin also founded Women in Finance Nigeria and then went on to fund an equivalent group here in the UK. She's the recipient of multiple awards, including the Forbes Africa-sponsored All Africa Businesswoman of the Year 2017 and Nigerian CEO of the Year 2018 by Pearl Awards. And to my right here, we have Antanas Bostandiev, founder and chairman of GemCorp, launched in 2014. It's a London-based fund dedicated to investing in emerging markets and is predominantly active in Africa. Since its inception, it's been investing across sovereign and corporate emerging markets and African opportunities, alongside investments in credit and equity transactions in excess of $6 billion. And he's also spent the last 25 years working in financial services for banks globally, again with a focus on emerging markets. Now, I want to start with you, Julia. Meridiam has 4 of its 11 offices globally in Africa, so you very much get to see Africa in a global context as well. And I just wondered, through your business activities, what are the opportunities that you see that are specific to Africa?
Thank you very much indeed, Mercy, and good afternoon, everybody. I'll just do a moment or two on Meridiam and what we look for. I mean, Meridiam, as explained, is an international infrastructure investor fund manager. But we have a particular approach which very much focuses from the whole cradle-to-grave life cycle, as it were, of projects, which means we're a developer, we're an investor, we're an asset manager. And we've been talking about the Africa opportunity, and as well as investing across Europe and North America, and doing so since 2006, in 2016 we set up a initial Africa fund, followed subsequently by another, equating to over $1 billion worth of equity capital for infrastructure in Africa, or, as Dr. Morangi said, separate countries in Africa. We must look at that division. And now we have invested across 14 countries. We have a whole series of different investments across transport, road, rail, airports. And as I say, a lot of these have been greenfield, because energy, from solar to biomass to geothermal. And when we look at Africa and we look at the African opportunity, we think that there is a massive amount that we can do, but there are certain challenges which I think it's worth pointing out. So what we see of Africa in the context of our total portfolio is it takes up approximately 20% of our total portfolio. We think it could be greater, but the number of challenges we face, for example, in relation to what is called the investable project, a number of projects need support in relation to their preparation. I think McKinsey has said nearly 80% of projects that actually start as concepts and ideas in Africa tend to, as it were, just fade away before they can get any further. So we are very supportive of working with countries, with organizations, and also most recently with cities to see what we can do to develop that investability of projects. And then once those are better to be put in place, we think that the capital will then come. Just very quickly on cities, we did set up this Urban Resilience Fund, co-created with the Rockefeller Foundation, to focus on putting catalytic capital into cities to help with this investability. Now, there are lots of other challenges. I don't want to take up too much time, but I just did want to express our enthusiasm as an international investor to invest right across a series of sectors in Africa.
Thank you. And to you, Choyin, now your group was established to bridge Africa's access to finance gap, and you've helped raise over $1 billion for governments and companies. And you do focus on small and medium-sized enterprises. And you think we shouldn't focus too much on these large infrastructure projects, but we shouldn't forget the small guys as well. What's been your experience of that?
Thank you, Mercy. So when we set out, we started business just under 5 years ago, and we started, as an investment banking business. And typical investment banking business, our biggest opportunities, of course, were with the big tickets, because essentially it's the same process, it's the same work, but the returns are different. But then increasingly we realized that if we were going to have impact and have satisfaction and be able to respond positively to, let's say, maybe 3 or 4 out of 6 or 7 potential clients that walk through our doors, we would have to look away, or we would have to look beyond your typical investment banking clients. And so we started working with small and medium-scale enterprises as well. We set up an SME desk, and right now we're incubating a couple of funds that are targeted at, one at tech SMEs and the second one at women-owned businesses across Africa. But our experience has been exciting, because we have found that these businesses have grown with our support, and they have grown to the point where we were now able to raise bonds for them. And so up till now, we have raised funds significantly for tech companies. We have raised funds for power companies. We have raised funds for some of the municipalities, the state government specifically, for power, road infrastructure, and we've raised funds we've raised a couple of green bonds. So it's been very rewarding. We've realized that some of the projects at first appear very hard to make them to be bankable and to attract investment. So sometimes we've had to put the initial investments in ourselves as we take them through the proof of concept, and then we have found that later we were then able to bring in other investors. So in terms of what has happened with our business, and maybe to just talk about, to speak to the point that Dr. Mwangi made, we found that our own investors have been able to enjoy 8.5x returns or in less than 5 years. So it shows you that doing good in Africa is also a way to do well. Thank you.
Thank you for that. Atanas, let's move on to you. You've written about the risk, the perception of risk when it comes to investing in Africa, and you've said actually it's often overblown. Just can you talk to us about why you think there is such a compelling case to invest in Africa and seize those opportunities?
Thank you, Mercy. Good afternoon, everyone. Thank you for being on this panel as well. Just a couple of words maybe about my firm, GemCorp. Since inception in 2014, we've invested more than $5 billion in private deals, direct lending, private credit in Africa, which probably makes us one of the UK's largest private credit investor. And we feel the challenges and the opportunities every day. We live and die with those. And I'm really passionate, as my colleagues and partners said here, about investing in Africa, because I personally grew up in communism, and I was fortunate enough to study in the States and to spend 20 years here of my life in UK financial industry. And I know what it takes to be given the opportunity, and we're passionate about now giving the opportunity to this incredible population, incredible young talent that Africa has, because that's not really the future, it's actually the present. That's what it is about. Many people speak that Africa is the future, but it's happening now, and we're passionate about giving the opportunity to those young people. Now, to your question about the challenges and the misperception of risk investing in Africa. We feel it and experience it because the biggest challenge, we all agree that the opportunity is investment in infrastructure, in industrialization, but all this requires capital, right? And the current allocation of global risk capital to Africa is de minimis. When you look at global institutional investors, including the pension funds, the insurance companies, the institutional investors from the Commonwealth countries, if you look at their allocation of risk capital to developed markets vis-a-vis emerging markets, the proportions are just disproportionate, right? It's so small allocated to emerging markets, and when you take the Africa quota out of that, it's even much smaller. So how is this continent, how are these 54 countries going to benefit? How are they going to attract capital, institutional capital, when the institutional capital that should be coming there is just not looking for it? Because a lot of the people, a lot of the investors misperceive the actual risk vis-a-vis the perceived risk. And I'll give you a very simple example, simple numbers. Take a look at the IMF quota that IMF attributed to Argentina. Argentina is 44 million people. It has defaulted more than 7-8 times over the last 20 years. And the IMF has contributed or given a quota of $44 billion for 40 million people. Now take a guess how much the IMF has attributed to Africa. Anybody? $30 billion for 1.4 billion people. Look at the World Bank statistics. Also, World Bank has allocated much more capital to Latin America, significantly more in Latin America than in Africa. So unless global policymakers, Commonwealth investors, institutions, governments take a systematic approach in changing the policy, that yes, actually, let's not only talk about it, but let's put our money where our mouth is, that is the first way to change the risk perception. It needs to be backed by policies.
Thank you. Julia, I want to come to you. Who needs to be in the room and who needs to hear these compelling arguments in that case for Africa and African countries to get this investment, which it clearly so desperately needs? And of course, everybody here thinks there is a compelling case to be made, but why is it not getting across to the right people?
Well, can I talk a little bit about the risk perception to start off with and go from there? I mean, we have in our funds investing in Africa, we do have pension funds, we have insurance companies, we also have DFIs, but actually in our latest funds, the largest proportion are international investors of one kind or another. And one of the ways in which we look at, as it were, softening that risk perception is making sure that a number of the projects that we invest in are blended, and they're blended finance in between the public and the private sector. And I think the whole move towards blended finance is a very key part of implementing projects. The other key part is to look at the potential for either external guarantees. I'll give you a particular point. When we're looking at power projects with PPAs, it's often the case that there's a higher risk perception in relation to the utilities with whom the PPAs are contracting. Now, in certain countries, what we've seen is support, for example, from World Bank partial guarantees, which have actually softened the level of risk perception. It means you can get international investors in. Alternatively, look at political risk insurance. Now, I think that in answer to your question, I think everybody needs to be in the room. And we need to work out a relationship between the public and the private sector that people feel comfortable with. For too long, the public sector and the private sector sat on different sides of the table. And there was a nervousness as to how they were going to conflate with one another. I think we now need to bring everybody around the table to make sure that we can actually focus on projects that can be done, and projects can be done with a good risk perception. And once you start seeing projects done, once you start seeing paid for, you can get people to come in after.
Antoine, do you relate to what the other panelists are saying, especially when you're looking at it from an SME perspective?
Okay, so I relate completely with what the other panelists have said. And before I touch on the SMEs, I would also talk a little bit about government projects. And what we have done when we have partnered with government is to put in a structure that ensures that we can then have private sector transparency and controls into the utilization of the funds that are raised, thus building confidence in investors. And we've done this successfully, and it has enabled us to raise increasing amounts from the debt capital market and for longer tenors for the state governments we have worked with, because these funds were put in a trust account and these funds were released only in line with agreed milestones. And then we had independent project monitoring that was under the trustees to the project. And so it gave confidence, because there was this perception that if you gave money to a government agency, you would come back 3-4 years down the line and find that there is no project in place. But now we ring-fenced this funding and we put in structures, and we've been able to successfully raise increasing amounts for the states that we've partnered with. So there is an opportunity for collaboration between the public and the private sector, the domestic, private sector and public sector, to then put structures in place that encourage internationals to come in. So with one of our clients, they're now at the point of sealing a much larger funding from an international development finance institution on the back of the preliminary work that we were able to do to actually get these initial stretches of road built. So from the SME perspective, what we expect will be able to attract international funding will be from the venture capital and PE funds, the local ones that are putting together or essentially attracting international funding, funds that are able to, operate as fund of funds, and then putting money in domestic funds so that more money can go into the local projects. And that's what we're working on. Thank you.
I just want to touch on something Dr. James Mwangi mentioned in his opening remarks, which is this fourth industrial revolution and the focus on digital and technological investment as well. Atanas, let's just go to you. Do you think there's enough focus on that side of things? Because we all know that, digital is the future, and there is so much untapped potential in Africa, especially with places like Nigeria, where there's such a huge young population. 70%, I think, are under 30. These are the sorts of young people we should be investing in to make sure that fourth industrial revolution in Africa is taken advantage of.
Absolutely. I fully subscribe to Dr. Mwangi's view on this. And actually, we within GEMCorp, we have a strategy to invest in high-tech companies across Africa, and we have backed up from the very early beginning one of the fastest growing fintech companies in Africa, which brings financial inclusions to tens of millions of people by using latest technology. This is the future, and I think Africa is the place where you see digital leapfrogging, right? There you go to immediately to the latest technology, the latest innovation. And it requires innovative financiers, investors like ourselves, like people here in the room, to literally be out there, meet such entrepreneurs and empower them, give them that capital that is required. Because sometimes from our experience, we're not talking large sums of money. It is even with a few $1 million of investment, you make a huge, huge impact. And we're literally practicing this every day, what we're preaching. In terms of the industrialization, absolutely. That is the future. Without industrialization, there is not employment. Without employment, there is no economic growth. And for industrialization, again, where the Commonwealth countries could come in, is invest and counter also the Chinese investment policies that have been going on in the continent for the last 20 years. Because if you can measure the amount of investment that the Chinese companies have done, or government vis-a-vis the West, it's again disproportionate, and industrialization is in every sector, from agriculture to food processing to mineral processing. I mean, even when we're speaking about green technologies, batteries, 80% of global lithium production is in China. Why can't we invest in lithium processing or other mineral processing on the continent? That is the future. And the West, the Commonwealth countries have the technology. It requires viable projects to be put together, to be developed, and private with the government sector helped to be implemented on the ground.
And Julia, do you recognize what Atanas is saying there? I know you invest in lots of big infrastructure projects, but what's the role of technology and digital investment as well?
Well, as well as the large infrastructure projects, and we do tend to invest on a greenfield basis, so really from scratch. We are now investing in a string of data centers across a number of African countries, from Kenya, Uganda, Ethiopia, and a number of others. And we see this as a critical part of the future infrastructure of Africa. As we move into the more digital age, we must have places where we can store, where we can process data. And as well as the importance of investing in large hydro stations or geothermal plants, investing in data centers we see as a very, very key part of our activity. There's a slightly different investment profile in that we would tend to have rather more private sector than public sector off-takers. But we think the Raxia brand that we use is one that is going to be critical to Africa's future.
And I know you want to come in. You've invested in fintech, of course. I'd love to hear your experience about that, Toyin, and where you think the opportunities are, and indeed the challenges as well, when it comes to things like fintech investment in Africa.
Thank you. So with a 1.2 billion population and a predominantly young population and a population that is largely financially excluded, obviously, for me, the only bridge that I can see between these huge numbers of young people and the economic opportunities that wealthy nations like Commonwealth, some of our Commonwealth brothers have, is through through technology, is through financial literacy, is through very, very much digital technology. And this is what can create and has created some of the unicorns we've had out of Africa. And we at Emerging Africa have invested in technology companies, both directly by way of equity investment. We have a fintech subsidiary that we hold controlling shares in, but also we have raised debt, and we have also funded directly other tech companies, and we've seen the impact that it's making. So it's a huge opportunity for everybody to invest in Africa.
Thank you. I just want to move the conversation on slightly now to something else, something a bit more controversial, I would say. There's always a balance to be struck. It's often seen as a conflict between economic growth, investment and markets, and social and environmental goals as well. When it comes to energy, it's a case in point. Over 700 million Africans had no access to electricity in 2019. That's according to the International Energy Agency. So we know access to energy is a massive issue, but energy is also contentious in that, you know, when you speak about things like fossil fuels, green energy, is there a place for fossil fuels when it comes to investment and growth in Africa, or do we must we shift towards green energy? Atanas, I'd love to hear your views on how this balance can be struck, this balance between economic growth and social and environmental considerations.
Thank you. Well, I have a very, very clear view, because we are experiencing the challenges of building one of Africa's or Angola's most important industrial project, and we're investing in a $1 billion modular, latest technology oil refinery. Probably we're the only people crazy enough, together with Mr. Dangote in Nigeria, to build a refinery in Angola or in Africa. And the challenges are the fact that when we went to financial institutions to ask for funding, the only funding for project that we got was from Pan-African developmental financial institutions, and none of the US or Commonwealth partners refused to give us, because they don't do carbon investment. Although our project is carbon neutral, using the latest gas capture technology, it brings jobs, inclusion, it brings energy security into Angola, and it cuts so much CO2 emission of ships having to go from Angola to China exporting the crude, and ships having to go from Europe into Angola bringing the refined products. It makes so much sense, and yet the view that we get is black and white. No, we don't do, or we do. And unfortunately, you cannot approach energy security, industrial growth and revolution in Africa with such a black and white approach. You need to have nuances. You need to, the West, financial institutions, they need to have the flexibility to allow for certain projects in Africa to fit within that framework, right? Because you cannot have energy, or you cannot have industrial growth without energy in Africa. And unfortunately, technologically, you cannot have energy security and energy sufficiency purely on renewables. We all know that. But these truths, this mathematics, this empirical data needs to be recognized, and certain nuances need to be allowed for to be included into for the African continent. Otherwise, without energy security, you are not going to have the industrial growth that we all require.
Julia, what are your views on this, especially, Atanas is saying there's not enough nuance that is had in the conversation around investment in carbon or completely green. Where do you think we should be focusing? Is there space for some carbon investment? Should we allow some?
Well, I'll come back to your point about balance in between ESG and economic growth. I mean, as we're a 25-year investor, we do not sell our assets. We haven't sold a single asset since we were set up in 2006. And this gives us a view that all ESG issues are integrated throughout the life of our investments. Now, these cover, obviously, a whole series of environmental issues, and we look to those and as in terms of longer-term investments and see the way that the world is looking at decarbonization. Now, within we have a particular focus on renewable investment and a whole range, as I've said already, from solar to hydro to geothermal. And we believe that there are a huge number of opportunities to promote this type of investment across Africa, and I think we're being supported by the international financial institutions that we work with very closely. In addition to that, I think that the more individual solar packages that can be made available to individuals across Africa will also enable a degree of that energy security for individuals. Energy security for industrial entities, I think, is another matter that we've been looking at in relation to storage. And although we haven't yet set up one in Africa, we have actually invested in a new hydrogen storage using energy electrolyzed, and then we have storage from that. So I don't think, I mean, on the whole, as I said, we have the focus on the low carbon investment or low or no carbon investment. And we have, well, everything is very difficult to make it absolutely zero carbon, rather than carbon intensive industries.
Yeah, Toyin.
I feel very passionate about this, and I have to speak up. I have lived in Africa all of my 57 years. I have suffered the pains of the low pace of industrialization in Africa. The reality is that we need a combination of both alternatives to give us the solutions that we need. So in our rural areas, I absolutely support the solutions that we can get from the renewables. And so I sit on the investment committee of the Off-Grid Energy Inclusion Fund for Africa, sponsored by the Africa Development Bank. And I support all the funding that we are pushing out there for the solar, and other renewables. But in terms of the needs of industrial Africa, cities like Lagos, we cannot wait until we are able to deploy renewables. We need today to continue to provide grid backed energy from back carbon, and wherever the power is, we need to get it to develop Africa. We cannot wait.
And of course, it's not just the environment, there's also social considerations as well to be made. And I know that you, of course, are very passionate about women in investment, and you've set up Women in Finance Nigeria and also here as well. So I'd love to hear how you're factoring in those more social goals as well in your work.
Thank you. So in Africa, and indeed in the whole of the world, we have 50% of the population made up of women. Unfortunately, these women, not just in Africa, but again across the world, are disproportionately financially included and empowered, and we need to fill the gap. And if we're going to fill the gap, we're going to need to have initiatives to build capacity for these women. We're going to need to have initiatives to create platforms for these women to network and to collaborate and to build wealth. And we're going to need specialized funding for women. I had the privilege of presenting the first gender focused investment vehicle to the Nigeria Stock Exchange a couple of years back. And recently, again, we have introduced another balanced diversity fund. And these funds essentially invest in the stocks of companies or securities of companies that can demonstrate significant representation of women across board, management, and the staff. And incidentally, these funds and these companies tend to outperform others. So it's a very clear case of putting our money in a good place and to do good. So I am an unapologetic advocate of all forms of gender inclusion and gender diversification on boards and management and companies. And we are currently incubating a female entrepreneur fund that will be Pan-African. And I would love as many people as can crowd in with us to create many more such platforms so that we can have the growth that we need in our continent.
And Atanas, as the only man on the panel, I'd love to hear your views on this, and not to put you on the spot, but Toyin is right. It's not just a case of, you know, including women, and it makes us feel nice and we can pat ourselves on the back. Actually, there's a business case to be made. We know that when more women are educated, for example, you know, economies thrive, that they thrive much more than when female education is lower. So we need women, we need women to be included in these conversations for when we're talking about economic growth.
I fully agree. Thank you for that. And even at GEMCorp, if you look at our board composition, you know, more than 50% of is composed by women professionals that have worked with me for more than a decade. It's also about you know, when you look at the empowerment of women or financial inclusion, it's all about also improving governance in Africa, right? You need to, you know, one of the biggest challenges that we see day to day is that, as my partners here on the panel said, is that a lot of the projects die too quickly, or they don't reach a financial close or financially investable type of stage, because the local investment teams, the local leaders, the local entrepreneurs, they just simply don't know how to do it, right? They simply lack the skill set or the experience that we here in the Western world have. And it is literally as simple as helping them put a financial model together or a financial pitch together, helping them explain how a corporate governance should be done, right? The way Western institutions, auditors, stakeholders, investors require it to see. And making that bridge is critical, right? And that bridge is from women inclusion, financial inclusion, education, providing the internships, providing the technology, the skill set. So it's about being there and literally helping, grabbing those people by the arms and guiding them how it needs to be done.
Thank you. We've got about 7 minutes left. So, Julia, I want to just go run through the panel for any closing remarks you have. And just going back to that question, the Africa opportunity is the topic of this session. So I would like to hear your final sort of closing remarks about what does the Africa opportunity look like, and what's the role of the Commonwealth and bodies like the Commonwealth Trade and Investment Summit in ensuring that we can reach the goals that we all share here for African growth?
Well, that's a very full question. I shall answer it in parts. As I said at the beginning, the Africa opportunity is very considerable from our point of view, but we are trying now to focus on areas whereby we can promote and develop infrastructure so that we don't have that falling by the wayside. And I think it's a very key part of looking at how the opportunity can be made greater. The whole issue of capacity building, getting projects from concept to shovel, is one that needs a terrific amount of focus and terrific amount of work. Often it's not so much the money, it's making the proposition available for investors and bringing in those investors that we've talked about that look at the risks being too great at the moment. And I think this is an area that the Commonwealth can really help with, because due to the network structure of the Commonwealth, it can bring experience from a number of different countries together. One of the ways in which we're doing it as an organisation, we're working with the Global Infrastructure Hub and the World Economic Foundation. We've created something called the Africa Infrastructure Fellowship Programme. And I believe this is indicative of the way that the Commonwealth could also work together, whereby we bring practitioners from public procurement, work with private sector companies, have a degree of exposure both to companies and to academic background, to bring up I don't want to use a cadre is the wrong word, so it's a group of professionals who can really help with this whole capacity building approach. And to the extent that we could have that type of network, I think it would be really beneficial in terms of creating a greater opportunity for all.
And Toyin, your final thoughts?
So my final thoughts are that the Africa opportunity is attractive, it's compelling, it is not risk-free, and from our position as Africans, African governments and private sector, there is what to do. I do believe that concerns around volatility of currency, convertibility and transferability of the proceeds of investments do need to be addressed by more policy stability at our end. Government guarantees where appropriate, perhaps also viability guarantee funds and those kind of initiatives will be supportive, but there is a big role for the private sector to play, and that's where Emerging Africa Capital plays, which is to support these domestic issuers and domestic companies and governments to ensure that these projects are viable, they're bankable, and they're properly structured to attract foreign investments. And please let the investments flow. A study by McKinsey found that in terms of appetite for African investments, there is much more from outside the Commonwealth than there is from within the Commonwealth. And that's something that, like Atanas put it, we need to put our money where our mouth is and be consistent with our commitment.
Thank you. And Atanas, your final words.
Thank you. I would reiterate what I said at the beginning. Africa opportunity is not the future, it is happening now. And the Commonwealth nations and institutional investors need to address this opportunity and the challenges with an urgency. And what does it mean? It means, in my opinion, that the biggest stumbling block is the allocation of capital, because genuinely there is scarcity capital allocated to the African opportunity, and that we can see every day. Even when you look at the government bonds of Africa, where they transact or where they trade today at mid 15% returns on average, relative to Western governments, it's just not comparable. And how are private companies going to borrow, at what interest rates private companies are going to borrow in Africa when your government is trading or borrowing at the market at 15%. That means that the premium that private companies need to borrow at is more than 15%. Yeah. But there are no forms of sustainable private company business that can sustain borrowing costs at 20%. This is the simple truth and the simple maths. And the only way we're going to bring down borrowing costs for governments is when more institutional capital is allocated to Africa. And that needs to come as a policy. And when that is addressed, my plea then is for institutional investors across those governments to work with companies like ours and the companies of my partners here that have multi-year, decade experience in investing in Africa according to Western standards and help deploy that capital where it's needed. Thank you.
Thank you. Well, that is it. We're right on time, so I have about 1 minute to wrap up. Thank you so much to my panel, Juliet Prescott from Meridium, Toyin Sani from Emerging Africa Group, and Atanas Bostandiev from GemCorp. And of course, we had Dr. James Mwangi speak and giving opening remarks from Equity Group Holdings. I think you've all made an extremely compelling case for why investing in Africa makes very good sense and why meetings like this are crucial to make sure that that Africa opportunity is seized on. So thank you very much. And if we could just give the panel a round of applause. Thank you.
Thank you.
Thank you.
Thank you so much, Mercy. Thanks very much to all the panelists. Don't worry, you're free to go. You don't have to stay there.